Hey everyone, it's Invested here, and let's be real, we all want to be financially secure, right? But most people think you need a ton of money to start investing, like a ridiculous amount. But guess what? That's totally a myth. Imagine this. You start investing just 500 rupees, or even just 10 bucks every single month. Sounds doable, right? Well, let me tell you, with the power of compound interest, you could actually be financially free in just 10 to 15 years. No, seriously, I'm not kidding. So, in this video, I'm breaking it all down. We're talking step-by-step how to start investing today. Even if you're totally new to this whole thing, we're talking about how to pick the right investments, avoid common mistakes, and set yourself up for success. Stay tuned. All right, let's start with the fundamentals, the ABCs of investing. At its core, investing is all about making your money work for you. Think of it like this. Instead of letting your hard-earned cash just sit in a savings account earning a measly 2% interest, which, let's be honest, is practically nothing these days with inflation, you're putting it to work in the market, where it has the potential to grow exponentially. Imagine earning a 10% or even 12% return on your investment every year. That's what I'm talking about. That's the power of compounding. It's like a snowball effect, where your money makes money, and then that money makes even more money. It's how ordinary people build real wealth over time. Now, I know what you might be thinking. Graham, this all sounds great, but I don't have thousands of rupees just lying around to invest. And you know what? That's totally fine. Because here's another myth I'm going to bust right now. You absolutely do not need a ton of money to get started. Remember that 500 rupees or $10 I mentioned earlier? That's all it takes. Seriously. The key is to start small and be consistent. It's like working out. You don't go to the gym once and expect to have a six-pack overnight, right? It's about building those consistent habits over time that lead to incredible results. So, ditch that limiting belief that investing is only for the wealthy. It's not. It's for anyone who wants to take control of their financial future, build wealth, and achieve their dreams. Whether you're saving for a down payment on your dream home, your dream car, or just that dream vacation you've always wanted, investing can help you get there faster. And the best part is, it's not as complicated as you might think. With the right knowledge and a little bit of effort, anyone can become a successful investor, and that's what I'm here to help you with. So, stick with me, and I'll guide you every step of the way. Okay, so now that you understand the basics, let's dive into the exciting part, the actual investments themselves. And don't worry, I'm not going to overwhelm you with a million different options. We're going to keep it simple and focus on the best investments for beginners, especially as we head into 2025. First up, we have index funds. If you're new to investing, this is where you want to start. Index funds are like the superheroes of the investment world. They're easy to understand, super safe, and consistently outperform most other investments over the long term. Think of them like a basket of stocks that tracks a specific market index, like the S&P 500 or the Nifty 50. When you invest in an index fund, you're essentially investing in the overall performance of that index, which is way less risky than trying to pick individual stocks. Next, we have ETFs, or exchange-traded funds. ETFs are similar to index funds in that they offer instant diversification. You're like a basket of assets like stocks, bonds, or even commodities, all bundled together into one convenient package. The cool thing about ETFs is that they trade on stock exchanges just like individual stocks, so you can buy and sell them easily throughout the trading day. They're also super cost-effective, making them a great option for beginners. Now let's talk about stocks. Stocks represent ownership in a publicly traded company. When you buy a stock, you're essentially buying a tiny piece of that company. Stocks can be a bit more volatile than index funds or ETFs, but they also have the potential for higher returns. If you're interested in investing in individual companies, it's crucial to do your research, understand their business model, and look for companies with a strong track record of growth and profitability. Finally, we have crypto. Now, I know crypto is all the rage these days, and for a good reason. It has the potential to revolutionize the financial system as we know it, but it's also important to remember that crypto is still a very young and volatile asset class. It's high risk, but it also has the potential for massive returns in the long term. If you're considering investing in crypto, it's crucial to start small, diversify your portfolio, and only invest what you can afford to lose. Now, if you're feeling a bit overwhelmed with all these options, don't worry, you're not alone. My advice? Start with index funds. They're the easiest, safest, and most effective way to grow your wealth over the long term. Even Warren Buffett, one of the greatest investors of all time, recommends index funds for most investors. Chapter 3. How to start with just Rs 500 or $10. Alright, ready to get started? I promise, it's way easier than you think. Here's a step-by-step guide on how to begin investing with just Rs 500 or $10. Step 1. Choose a broker. A broker is like your gateway to the stock market. They provide you with a platform to buy and sell investments. There are tons of great brokers out there like Zeroda, Grow, Upstocks, Robinhood, and many more. Do your research, compare fees, features, and user experience to find the one that best suits your needs. Step 2. Open a DMAT account. A DMAT account is like a bank account for your investments. It's where your shares and other securities are held electronically. Opening a DMAT account is super easy these days. Most brokers offer online account opening processes that take less than 5 minutes. Step 3. Pick your first investment. Remember, we're starting simple and safe, so I highly recommend going with an index fund that tracks a broad market index like the S&P 500 or the Nifty 50. These funds are well diversified, low cost, and have a proven track record of delivering solid returns over the long term. Step 4. Invest small amounts consistently. This is where the magic of compounding really kicks in. Instead of trying to time the market or invest a large sum of money all at once, focus on investing small amounts regularly, like Rs 500 or $10 every month. This is known as the SIP method or systematic investment plan, and it's one of the most effective ways to build wealth over time. For example, let's say you invest Rs 500 every month for 20 years and earn an average annual return of 12%. Guess what? You'll end up with over Rs 50 locks. That's the power of compounding in action. So even if you start small, consistency is key. Remember, investing is a marathon, not a sprint. It's about making smart decisions, staying disciplined, and letting your money grow over time. Chapter 4. Common mistakes to avoid. All right, now that you know how to get started, let's talk about some common mistakes to avoid. Because let's be real, we all make mistakes, especially when it comes to investing. But the key is to learn from them and not repeat them. Mistake number 1. Trying to get rich quick. I know it's tempting to chase after the latest hot stock tip or invest in risky schemes that promise unrealistic returns, but trust me, there's no such thing as a get-rich-quick scheme. Investing is a long game, and those who try to take shortcuts usually end up losing money. Mistake number 2. Not doing your research. I get it, researching investments can seem boring and complicated, but it's crucial to understand what you're investing in and why. Take the time to learn some basic investing terms, read company financial statements, and understand the risks involved before you put your hard-earned money on the line. Mistake number 3. Investing without a plan. Before you even think about buying your first stock or mutual fund, sit down and create a solid investment plan. What are your financial goals? Are you saving for retirement, a down payment on a house, or your kids' education? How much risk are you comfortable taking on? Having a clear plan will help you stay focused and make better investment decisions. Mistake number 4. Panicking during market crashes. Here's the thing, market crashes are inevitable. They're a natural part of the economic cycle. But the worst thing you can do during a market crash is panic and sell all your investments. Remember, the market always recovers eventually. If you've invested in solid companies and funds, the best thing to do during a downturn is to ride it out and even consider buying more at discounted prices. Remember, patience is key when it comes to investing. The market will go up and down in the short term, but over the long term, it has always trended upwards. So stay calm, stick to your plan, and you'll come out ahead in the end. Chapter 5. Next steps and call to action. So, there you have it. Investing isn't as complicated or intimidating as it might seem. Remember, the key is to start small, be consistent, and invest in a diversified portfolio of assets that align with your financial goals and risk tolerance. Whether you're just starting out with Rs 500 or $10 a month or you have a larger sum to invest, the most important thing is to take action. Don't let fear or procrastination hold you back from building a brighter financial future for yourself. Now, if you found this video helpful, hit that like button and subscribe to my channel for more investing tips and tricks. And let me know in the comments below what's stopping you from investing today. I'm here to help you achieve your financial goals. Outro. Start investing today. Look, the biggest takeaway here is that you don't need to be a millionaire to start investing. Even with a small amount, you can make your money work harder for you. Remember that example of investing Rs 500 a month? That's less than what many people spend on coffee. The truth is, the biggest regret most people have is not starting sooner. Time is your biggest asset when it comes to investing, so don't waste another minute. Open that DMAT account, make that first investment, and let the power of compounding work its magic. And hey, if you ever have any questions or need some guidance, you know where to find me. Hit that subscribe button, and let's build that financial freedom together.